The concept of investing in the stock market needs a makeover. Many people have the will and even the means to start investing in the stock market, but they do not start because of reasons like they don't think it's for them, they think the jargon is too hard, and they don't know when to start. The stock market sometimes seems like it's on this spinning wheel that is constantly going at a high speed that they don't know when to start or even how to start. So the purpose of this video is to cut down all that jargon and also to show you that this is something that can be done by a regular person, and it is quite easy if you can try to take it one step at a time and not to think that it is only supposed to be done for you by a professional, which is not a bad thing. But if you must learn on how to do this yourself, it is quite easy. I have done it, and I think anybody out there can do it. So just stick around, subscribe, like this video, and I'll show you how to get through it. First thing would be to determine the goals. What is your goal? What do you aim to achieve at the end of the day? Are you trying to supplement your current income? Are you trying to switch it all up entirely and begin to have a new career in trading and doing this full time? Are you trying to grow your retirement basket? Are you trying to, build a portfolio? This is going to be very crucial when you're starting off, because while you start off, you need to understand how many, if you are trying to invest for like retirement, how long are you going to be into it? At what age are you starting? But also for this particular video, I want to address people who are just beginning. So ideally, the easy way for you to get into the stock market, according to my view, is to start off as an investor. That way, you are taken away from the pressures that come about when it comes to day trading or actively trading the stock markets, because sometimes they can be overwhelming. Next thing to do would be to put money aside for your emergency fund. This is very important because it saves your portfolio from being disrupted, especially when somebody is really pushed to the wall and they have to draw out money. So setting aside a specific amount that you know is going to be sufficient to take you through a month or 3 months, of expenses is really crucial. That way, you know that you will continue on your investment journey in spite of anything. Country could be shut down, but your investment will not be touched because you have already planned for this in advance. The next thing is to open up an account with a brokerage firm. This is where you're going to do your trading from. So you could go to Robinhood, there's Webull, there's TD Ameritrade, there's Cash App, there's Vanguard, there's Fidelity. Choose your poison. Whoever works for you, you have to go and see what these people offer. You can, match them up and see who offers you the better deal. But specifically for beginners, Robinhood is really good because it offers you even fractional share trading, because sometimes we start with small accounts and we want to be able to buy into certain stocks that we fancy, and the money is small. Fractional trading is really very crucial for somebody who is just trying. That way they can own a stock like Amazon, which is very expensive, or even be able to buy the SPY, which is equally expensive. So for those people who start with small accounts, they can be able to take advantage of that. But also, you need to choose one which works for you. So go into that, understand it, and then you make your own decision from what you've gathered. Now that you have opened an account, I believe you have funded it. You can always fund it with whichever much you have at the moment, because it doesn't really have a minimum amount for you to start investing. So the next thing would be to start investing. When I say start investing, literally just go and start buying. Buy something. And the thing to buy at this moment would be ETFs and mutual funds. The reason for ETFs and mutual funds is because they offer you diversifications all wrapped in one, because you will be buying into baskets of companies. So ETFs like the Dow Jones, which has like 30 companies that are traded, that basket, instead of going out to buy each individual stock and buy across 30, all of them, or even to just buy the ETF, the SPY, which tracks the 500 companies, instead of going out to buy each individual company, you would rather buy just one that in this case, you just buy one that tracks everything. That way you have the peace of mind that you own a little bit of all of them, and while one is going down, the other will be going out. So it's balanced out. You don't have that much pressure of even having to suffer through company fundamentals that come when you are dealing with individual stocks, if you know what I mean. Now that you have already started investing, you have your ETFs going, you need a game plan on how to continue to grow your portfolio and to grow it at a steady momentum. So the thing to do here that I would do is dollar cost averaging. So this concept has been proven and used by so many people in the investment world. What this means is someone committing to contribute a specific amount of money within a specific period, which could be monthly, bi-weekly, or weekly, whichever you choose. But the thing is to stick to the plan, and you have to do it over a particular period of time for you to realize that it actually works for you. So the thing is, you choose to contribute a specific amount. It could be like $500 or $1,000 on a monthly basis, and you continue to do it consistently, no matter whether the stock is up or down or sideways. It doesn't matter. As long as that day that you chose to be contributing to your investment clocks, you just drop in that money, spread it around in whichever percentages you use across all the investments that you have. Over time, this is going to be giving you maximum profit, and the movement is still going to be upwards, as the stock market has always proven to continue to go upwards over the years. Now that you've gradually been doing the dollar cost averaging, you know what your ETFs and investments are doing at this point. You are steadily doing this thing. The next thing I would advise you to do is to get some more education. You cannot just be putting money into this thing and just sitting back and relaxing. You need to know where your hard-earned dollars are going. So this is the time when I will ask you to begin to get into the know, dive deep, become ninja about this. Go and understand what is this I'm invested in, how to read charts, read some books, go to YouTube, research around, ask around. You can drop me some questions, drop me questions in comments. I will definitely be trying to answer everything as soon as I can, but get some education into this. Now that you're a bit educated, gradually start to invest in individual stocks. At this point, I want to believe that you know how to even manage your risk, because when you start investing in stocks, you need to be able to understand risk management, because here at this point, I want to believe that you are a little bit more active, or even shorter term investing on the short term, so you know what to do exactly when, and you will have to diversify some more on the portfolio you've been building on. So going into the stock market and now choosing these different stocks depending on the fundamentals, on even what looks good for you at this point, is very advisable. So with this basic information, I believe you are well armed to start investing in the stock market. So go out there, do your due diligence, and start investing. Thank you for your time, and see you in the next video.